afternoon. Thanks, everyone, for joining us. It's been a while since we've done a digital newsletter. I think we actually skipped a whole quarter, so apologies for that. Things got a little bit busy in Q1 for us, but yeah, happy to be back on our monthly schedule to get some updates from our companies. With me, I have Victoria. Hey, Vic.
Yeah. Hey, guys. No, it's actually good because, there are actually a lot of updates from companies to run through. So it's definitely a good digital newsletter to catch. I guess just on our end, some of the things that we have going on, Deb, why don't you kick it off with?
Yeah, for sure. So we have started doing in-person events as well. We're going to continue with the virtual events, but we're also going to do some in-person lunches, cocktail things, road shows, conferences. So that's exciting. I think we've got 2 upcoming. One is a lunch in Vancouver next Tuesday. So if anyone's interested, feel free to reach out. That's with Sierra Madre and Kingfisher Metals. And then on the 21st in Scottsdale, Vic and I are doing a cocktail event, which should be a lot of fun. Who do we have attending that? I think it's Kingfisher again, Sierra Madre, Talisker.
Sort of Health is coming. So I think we have about 6 corporates that are coming. So for any investors who are interested, it's a little bit mining heavy, but there are companies outside of the mining space as well. But if you have interest in joining, just send Deborah or myself an email. You can email info@Adelaide as well.
Yeah, and we will do something in Toronto this summer too. So watch for that. Other updates. So we've actually had a colleague of ours, a consultant that's worked with us for 5 years, who's Ukrainian, and she fled from Bucha. I think it was around the 26th of February. She's in Poland right now, and we're looking to help her and her family come to Canada. So we started a GoFundMe charity for anyone that's interested in donating. No pressure, but we'd like to see them have the ability to come to Canada and live comfortably until the war ends. Or hopefully they could go back to Bucha and rebuild. But we'll put the link to that fundraiser in with the video. And then, we're going to do a couple fundraising events in conjunction with that. So watch for that over the coming weeks. And with that out of the way, I think we can pull over our first guest.
So I think we're going to start with Bonterra. Thanks for joining us today, Mark. How are you doing?
I'm doing very well. How about you, Victoria?
I'm good, thank you. So you've been in the role now for a few months. How are you settling in?
Yeah, I'm doing well. I'm actually getting quite comfortable in every day. As I'm gathering more information, improving my knowledge of about the company and our projects. I see even more potential in Bonterra's asset. We're building up our team with the recent addition of a director of geology. We're still looking for vice president of exploration. The recruitment is progressing well. That is a key position for us to improve our leadership in our geology team. We have a good release this morning on the Barry project. We're very excited about the potential to add more ounces on the northeast portion of the pit, and also at the depth with the underground resources, with the discovery of a new H series zone. So very exciting time for Bonterra for now.
And then you guys also recently just updated your corporate presentation. And I saw that in that you guys really did provide an in-depth look at timing for, drilling and permitting and engineering at Barry and Gladiator. So I was hoping you could just, walk us through that a little bit and what has changed.
Yeah, in the last 2 months, Victoria, I had the chance to do a technical review of our project, and I think as we're getting more information, we are able to put more details in our corporate presentation. So that's what you see now. At Barry, we have 2 diamond drills on site in activity. One is now drilling 400 meters on the northeast of the Barry open pit resource. And the second drill is on the regional exploration on the Moss property, where we have published, I believe, last year, some good results as well. We're still working on our technical review for Barry underground deposit. We will soon undertake an infill and definition drilling program on the underground portion of the deposit to better understand the potential of an underground mining scenario. We got the PEA ongoing on the Barry pit. It's going well. We expect the completion by the end of the second quarter. And, the PEA will basically dictate us the next steps, but the formal decision will be made after the PEA to proceed with a PFS or an FS for an eventual restart of production next year. At the Gladiator, we are working on an exploration ramp design that is progressing very well. We are also waiting to hear back from the COMEX about the permitting process. We believe we do not need an impact study for the construction of the ramp, so that should expedite the permitting process. At the Bachelor Morwa, we have one drill on a regional target there called the Maréville property. Very underexplored region, quite promising, from the magnetic survey. So we're testing the that part of the region, which is located very close to the Bachelor mine and mill. At the Bachelor Mine Complex, the permitting process for the mill and the tailings management area expansion is ongoing. The company expects to provide additional information by mid-year to COMEX, and we expect to get the permit by the end of this year, followed by the provincial permitting process, which should take place next year.
That's interesting because this is really the first timeline that you guys have given where you do talk about, the potential to start commercial production. I think you guys talk about 2024 for the Barry open pit. And we've never had that guidance out of Bonterra before. So it feels like things are getting closer.
Yeah, sure. As we're getting more information, we're working pretty hard on the PEA now. That takes most of our energy. And I think the PEA will definitively demonstrate the potential of an economical open pit operation there.
So over the next few months, what should we be watching for out of Bonterra? We have the PEA, as you've mentioned, coming out kind of by the end of the second quarter. What else should we be looking for?
We're receiving on a daily basis a lot of assays, a lot of results from last year's exploration campaign. So I think you can expect more releases as we're getting more results, like the same kind of release that you saw in the last couple of weeks and today. And of course, we continue to build up the team, the technical team, and we are also working on the Gladiator ramp, which is going to be a very important project for us next year.
You guys are busy. It's going to be nice to watch it all unfold. So
very
thanks.
Busy, exciting time for Bonterra again.
That's good. Okay. Well, thanks for joining me today. I appreciate you jumping on and giving everyone the update. And we will chat again soon.
Thank you very much. Thanks, everyone.
Thank you. Hey, Mark, how are you doing?
Hey, I'm good. How are you this morning?
Good. Okay. Yeah, we had some technical difficulties before you jumped on, but they seem to be working now. So yeah, you guys have had a busy few weeks, at Netcoins specifically. You guys have been out there launching. I think you guys have doubled your coin offering, within the span of a week. So do you want to maybe just walk through that and what's changed and what's happening?
Yeah, absolutely. Yeah, it's been an exciting time for Netcoins over the past couple of weeks. We, as a regulated crypto trading platform, we got our license back in September 2021. And part of that licensing was how we stored customer coins. And cold storage was the answer. But there's a lot of great coins out there that people want to trade where there isn't good cold storage options. So we been working with the regulators for the past couple of months to make an update to our license saying that we could keep coins in warm or hot wallets and insure them. Making sure they're just as safe as cold storage, but in a different way. And we received that update, and that's allowed us to roll out a wide range of new coins. So you said within a span of about 10 days, we went from 11 coins to 22. We did a batch of 5. The first batch included some, coins that are highly traded like SHIB and Doge. And in the second batch, we added a few more coins, actually 6, including some brand new ones like APE that just came on the market. And there's not very many places you can trade it in Canada. So we're excited to have that on the platform. And with more coins, there's more stickiness to our platform. Customers can come and one-stop shop all the different assets that they're looking for. And every coin is a small new revenue stream for us at Netcoins because people want to trade that coin. They trade it with us because we have it. And it generates more revenue. So we immediately saw the new coins were making up between 5 and 15% of daily revenue, even right out of the gate. So exciting times for Netcoins and a good evolution of the platform. And, we expect many more releases of coins going forward as we grow the platform from the 10 to the 20 to 30 and plus coins.
Yeah. So you've mentioned that in each of the release, like this is kind of the first rollout. This is the second rollout. So what should we expect in terms of cadence moving forward? Is it going to slow down a little bit now, or are you guys still kind of busy on the back end, or what will that look like?
We're busy on the back end. In fact, we pre-planned about 4 to 5 different rollouts of coins, the first 2 that have come out. We do have to balance it with other platform updates. We're making some great updates to our customer onboarding flow to make it easier for customers to sign up with Netcoins and become customers quickly, and all sorts of other improvement features. So we're balancing the rollout of coins going forward with other key features of the platform. But you will see a continued steady stream of coins.
And then just quickly, in the first coin rollout release, you also mentioned, what was going on with US expansion. Can we maybe just touch on that quickly as well?
Yeah, when we looked at the US, we said, hey, it is a highly competitive space. And there's about 3 different things that we're looking at. We decided we wanted more coins before we launched. We were sitting at 11, and that would have had us underserving the US market. So definitely adding these coins are going to enable us to launch in the US as a stronger platform. And I did just mention KYC. There's actually some very unique technology that's only available in the US for US residents in terms of onboarding and KYC and doing background checks. We want to implement that technology so when we launch in the States, we can bring customers on quickly and easily. And the regulatory framework is changing in the States on an ongoing basis. Biden having his executive order around crypto. We've seen other competitors having some regulatory challenges in the States right now with how they're offering their products. So we're just making sure that we're extra buttoned down from a regulatory point of view to launch in the States. So still coming. We're going to be in the States this year, but we're not going to push it too soon. So we're not ready. So we're going to be ready, and then we're going to go to the States.
Okay, that's great. Anything else that you want to touch on, or?
Yeah, I just want to mention as well, Blockchain Intelligence Group is doing some great work in the forensic space. That business keeps growing nicely. We'll be seeing quarterly numbers coming out. Q4 comes out by the end of April, and then Q1 we'll be seeing those results by the end of May, 2 months after the end of the quarter. But that company was just recently involved in helping dig up information and figure out what happened with the $620 million hack on the Ronin network, which is part of the Axie Infinity game, providing information back to the company and to the media who's very interested in these things on where the coins have gone, what's happened with them. So Blockchain Intelligence Group continues to do great work. And our new investment in TerraZero in the metaverse, we're hoping to put out a nice update for investors on all the good activity they have going on and new customers they've been onboarding in the very near future. So we're firing on multiple cylinders.
Okay, no, that's great. So we'll watch for the news on TerraZero and more coin updates. And thanks so much for coming on.
My pleasure. Thanks for having me.
Up next, we have Brendan Cahill, CEO of Excellon. It's been quite a while since we've gotten an update from you, Brendan. So lots to talk about, I'm sure.
Sure. Yeah, we've been up to lots of things and some good, some bad, but pretty excited for the next few months for sure. I think one of the big pieces of news over the past month or so is, really digging into our Kilgore project in Idaho, which we acquired in April 2020 from when we acquired Otis Gold. And, really interesting project, about 1 million ounces, 0.5 gram, 0.6 grams, always really looked at as mostly a heap leach project, open pit. But we always had this opportunity there that we saw for much higher grade gold. And that's something that we followed up on over recent months, rebuilding the database, remodeling it. And when you look at it from the high grade perspective, you see these structures kind of ripping through every layer of the stratigraphy. And, results like, 11 grams over 6 meters, 9.5 over 14, 20 grams over 4 meters, just to name a few. And really re-looking at this project from the potential for high grade underground is one of the reasons we bought it in the first place. And now starting to get those results back, understanding where to go next, and setting up for the drill program, which we expect to start in July of this year. So, it's kind of turning the project on its head a bit. Instead of only having that path towards open pit heap leach, there is that potential for underground, looking at it from a structural perspective, which just really changes the course of the project potentially. Maybe a different permitting path, but really excited for this drill program coming up in Q3. And then at Silver City, we keep on drilling. We had some good results out in early February. 0.5 meter, almost 0.5 meter at 1,600 grams per ton silver equivalent. That's mostly silver. And just progressing that project. We know we have the grade. We know we have the structures. We've got a massive epithermal silver system there. On a 340 square kilometer project in a jurisdiction that is increasingly looking to, mining and bringing supply chains much closer to home, right? This was happening before the horrible events in Ukraine and what Russia's doing there. This move towards a circular economy in Europe has been afoot for years. The prospect of shipping silver from Mexico and nickel from Indonesia, if you can get it closer to home, that's definitely something that's getting more important in Europe now. And obviously, with the events of the past couple months, serious disruptions to supply chains, as we're seeing. So I think the prospect of mining in Europe eventually, and it's already happening across the continent, has become more and more important and more top of mind as we see the really historically tenuous nature of these supply chains that's now being laid absolutely bare. And then in Mexico, or unless you want to stop for a question there, Deb.
Yeah, sure. I was going to ask you, are there a lot of silver mines in Europe?
There's not a lot of silver mines in Europe. Poland, though, actually has the largest silver mine in the world, a KGHM run operation that does about 40 million ounces a year. So that's almost double the size of any other silver mine in the world. You've also obviously got some great silver development and mining projects in Morocco with Aya Gold and Silver operating down there. But where we are in Saxony in Germany was the world's great mining hub for the best part of 1,000 years, up until the late 19th century, before a lot of those miners moved over to Mexico and commercialized mining operations there. Now the greatest mining, silver mining district in the world. So in Mexico, we're operating Platosa again. We had a bit of a labor hiccup and disruption during March. And also announced that we're going to be winding down that operation in Q3 of this year. We say Q3, but you always seem to find more Platosa, but that's kind of where things look at right now. But, still very focused and committed to Mexico. And I think we're looking at a number of assets there. And, that's always been part of our plan to grow the production base in Mexico, and still is.
Got it. A couple of things that I wanted to ask you about, just generally, like the market action over the last little while. Excellon's been pretty wild.
How could I leave that out?
Yeah. Can you talk a little bit about that?
Yeah. So, and if anybody's looking at it still, you've got Hycroft Mining, HYMC, listed on the NYSE or NASDAQ. I'm not sure the exact exchange, but it's trading, up to 200 or 300 million shares a day off of 60 million shares outstanding from a couple of weeks ago. So we kind of got caught up in that. And one of the reasons is we only have 34 million shares outstanding. Being a silver producer, highly exposed to precious metals with an NYSE American listing, we've kind of attracted that meme audience to at least a degree. It's one of the reasons we have that NYSE listing. It's one of the reasons we focused on having a very tight capital structure And we saw trading up to 37 million shares on March 9th or 10th. Off a number of shares of 34 million shares out. So I think, it's important to be in that space. There's, I suppose, a bit of an irreality about that space, but it's also a reflection of the huge capital pools and volume that you can achieve having that US listing. So I think that really is an important part of our story going forward as well.
And I think I read that Tesla's looking at opening a factory in Germany, or
it's opened, right? And I heard that Elon Musk couldn't get in the Bergheim, so it's an inside joke for those in the Berlin club scene. But I mean, they are there, and I think it's an important part of the story, right? Creating supply chains from farm to table, right? And that is the nature of the circular economy, and we're right in the midst of it in Europe. Okay.
Well, that's a great update. I think we're going to be doing a full-length webinar in the coming weeks. So once we lock that in, I'll make sure that everyone gets an invite. And really good getting caught up. Exciting times, especially with what's going on in Europe.
For sure. For good and bad, of course. I mean, we're in the right spot, but it's scary times there too.
Yeah. Well, thanks for supporting our cause too, Brendan.
All right. No worries. Thanks, Deb. Thanks, Victoria. See ya.
With that, we're going to move over to Surge.
And we didn't talk about new clients, but Surge is one of the clients that started working with us in Q1.
Yeah. Paul, welcome to the Adelaide family. We're happy to have you guys.
Yeah, no, it's been a great platform for us. Andrea is trying to get us on video here.
Perfect.
There we go. Thank you.
Hey, nice to see you.
Yeah, you too. Your hair is a lot longer.
Since you are one of our newer companies and haven't done a newsletter before, we thought maybe you could just spend a few minutes, giving a quick overview of the Surge story for everybody.
Sounds good. No, I'm thrilled about it. Our timing's turned out to be great. Surge is, I've done this 4 times for the most successful oil companies in Canada: StarTech Energy, Crescent Point, Starpoint Energy, Trust, and now Surge. And really the bottom line of it is it's about quality assets. And if you look at our timing, 2020 was a nightmare for our entire industry. Oil went to 11. So we use that as a way to preserve value, not issue distressed shares or whatever, cut costs, shut in production, all that stuff. 2021, though, was positioning to be a top performer. So I've had 4 of the top performing oil companies with 4 different teams. And as great as I can say I am, it comes down to asset quality. So when you look at Surge, that's really what we can point to and say, we have those high quality, large oil in place, low decline conventional assets, and they outperform. And it's that trite, it's that simple. So now in 2022, we did 620 million of transactions in 2021 to deal with the Canadian chartered banks leaving, get our balance sheet to be one of the best, reposition our company, 2 takeovers of really good light oil companies with very low debt. And now everyone's got us as one of their top picks. So it's kind of thrilling. Our stock has been one of the top performers in the entire energy space since we announced our term debt deal in early December. And it's quite exciting. So we've kind of positioned to be the top performer in Canada this year. And it's nice that it's working out.
I guess, can you just talk a little bit more, about that low decline model and how it really helps you guys in times like this in terms of free cash flow generation?
Good for you. That's literally one of the key tenets to the model. And that is elite conventional, large oil in place reservoirs, low decline. That means Surge. We have about 300 million of cash flow this year, but we only have to spend 125 million to stay flat. So I've never actually had an oil company that had 175 million of free cash flow. So we already have one of the best balance sheets. So as we hit our debt targets by about June, July of this year, we're going to start our dividend. We're going to start share buybacks, continued debt reduction, and probably add a modest growth wedge. And the real important thing is, to your point, what do these elite reservoirs, low decline reservoirs deliver? Our earnings in our business have been kind of hokey for years. So I think what's happened is free cash flow has turned out to be the new earnings, if you will. And it kind of makes sense from a business. If you're making widgets, after your costs, what's left over for your profit or your earnings? And in our case, we've now been written up by Peters & Company and now 9 Point Partners, which is Eric Nuttall's big, very good performing fund, energy fund, as the best free cash flow yield in all of Canada of any company. And that means we're making our widgets we're delivering people a 38% free cash flow yield after all our costs of staying flat, our production flat for the year. So good on you. That is the kind of key point. And it's what you get with these elite reservoirs. You get the free cash flow yield.
Well, and I guess the other point too is, God forbid if oil goes back down like we saw in the past, but you do have that protection on the downside as well, because it doesn't take a lot of money to, replace your production.
Yes, exactly. We're probably protected. I mean, oil's $95 today. We're protected on our drilling capital down to the, mid $40 WTI range. The other benefit you get too is your net asset value per share. When you look at, I only know two ways to value oil companies. We have the best free cash flow yield in Canada, as independently researched by Peters and others and 9 Point Partners. But our new net asset value per share is almost $17 a share, and we're trading at $8 or $9. So I love that. And that just says, and that's on a flat $70 US a barrel price deck. At $70, our net asset value is $16.94 a share. No land or seismic. So that's the other way to value an oil company. And when you look at those two ways, we present one of the best value propositions in the country. And I would have kind of said that, Victoria, before you talk about our Sparky play. And that's probably where I'll finish up on that play. It's turning out to be one of the top 3 or 4 plays in all of Canada.
Well, I guess just lastly then, so over the next few months after June, you were saying, look for dividends, look for share repurchases. Anything else we should be kind of watching for?
Yeah, our Q1 results are spectacular. The drilling results in Southeast Saskatchewan, which is ranked second in the latest Raymond James research to the Clearwater play. And then our Sparky play is ranked number 4. We just had a blowout quarter on drilling in both Southeast Saskatchewan, some 200 and 300 barrel a day wells that pay out in about 6 weeks. 6 weeks. The netback's over $90 a barrel to today's pricing. And then our Sparky play, as I said, has turned out. We've grown it from 1,000 to 9,000 barrels, drilled 200 good wells in a row, have 400 more locations, think we can take it to 15 or 20,000 barrels a day. So you get the great value proposition, the leading free cash flow, and then 2 of the top 4 oil plays in all of Canada is kind of those are our main distinguishing features of our company.
Okay, well, let's end it on that. And thanks again for joining us today. And we're so glad to have you as part of the Adelaide family. And I'm sure we'll be chatting again soon.
Sounds great. Thanks for having me.
Thanks so much. Okay, and then next we are going to have Silas from HealthSpace joining us. Hey, Silas.
Hey, Vic.
How's it going?
It's going well. Yeah, it's been very busy. It was a good start to the year, as we just announced yesterday, an update on our sales progress through Q1.
Yeah, I wanted to talk with you about that. So this is a new update that you guys haven't really provided after quarters in the past. So maybe just give a little bit of rationale, why you guys are coming out with a little bit more details for everyone. And then if you could just walk us through the release as well. There was tons of great information in there.
Yeah, absolutely. I mean, one of it is just based upon feedback we were getting from shareholders and investors, just to provide certain bits of details in a slightly different format. Obviously, as management, it's difficult to see the forest of the trees. So we're changing the dialogue in terms of how we're communicating and also the cadence, providing an actually quarterly update. One of the things we mentioned in the update is that 10 of the 12 deals and sales that we announced were closed in March. And so because of that irregular cadence that comes with sales and government, it was really important for us to develop a slightly different but more reliable cadence. And that's what we did with this Q1 presentation.
Yeah, that's good. Just to help smooth out some of the lumpiness that you guys can see from time to time.
Absolutely. It goes in surges and waves, and we will see more normalcy now that the pandemic has largely died down. And that's, one of the things we touched on in the Q1 sales update. But, looking back, we did 3.26 million in total deals, which is a really strong Q1. For us, if you look at government procurement cycles, Q1 is always going to be a little bit slower than the rest, simply because budgetary cycles within government, they're usually closing deals. Really, summer's like that midpoint. So it's either a little bit before or a little bit after. So Q2, Q3. So the fact that we were able to close $3.25 million within the first quarter and really set the table for a strong Q2 and 3.
And then I know that you talked about as well in the release FDA grants. You guys were starting to close some deals there. Any extra color you can add kind of on that initiative?
Yeah, well, it's a 3-year program. So this was the first year that the FDA released it. They're doing $40 million over 3 years in grants. And the way that they're structuring this is that each health department, no matter what size they are, is they go through an application process. And this year they saw a pretty good, healthy listing of applications the FDA did. However, as the program matures on the FDA side, and they are able to get the word out a little bit more, and we're working with one of the national associations that's pushing this grant program. We're working with them to really educate the customer market, because a lot of health departments, they either didn't know or they didn't meet the deadline for filling their application. So this year, we're starting to now see the fruit from the first cycle of grants, but there's going to be 2 more years of this cycle, and each year is likely going to have more volume in it. So we announced 3 deals from that FDA program inside of our Q1 sales update. We have several more that should close here in Q2. But as we head into the latter part of the year, they're going to reopen that application process. And so next year, we should start to see a lot more volume from that FDA program.
And then I guess just lastly, only because I know, the meaningfulness that HS Pay can really mean for your business. I know that you guys didn't really talk about details of HS Pay in this release, and it really did just launch. So I don't want to get ahead of everything. But, as you see more pickup in HS Pay, is this, a revenue line that you do plan to break out in the future for investors?
We absolutely do. And it's one of those things that we'll start to publish the numbers once the volume catches up. And that's really going to be when government starts these health departments and these customers of ours start running through their normal billing cycles. Government, as everything, is always cyclical. And just like they close most of their deals and do their procurement cycles around the summer months, the same thing when they send out their invoices to their constituents. And so right now we've onboarded over a dozen customers onto HS Pay and continue to onboard more each month. We're seeing hundreds of transactions a month, and it keeps on building. But right now they're low dollar transactions. And as we head into renewal cycles for these agencies, we'll start to see those transaction amounts climb, which will really just net down into more significant revenue for us.
Okay, that's great. So I appreciate the update. Is there anything else that you wanted to touch on, or did we cover it all?
No, that's pretty much it for now. We're going to be releasing our year ends here end of month. And we had a really strong 2021. And then, on the heels of that, we'll actually be releasing our full Q1 numbers. And so, stay tuned for that and some more exciting news ahead.
Okay. Thanks so much, Silas.
Awesome.
Thanks, Silas. Nice to see you.
Good to see you, Deb.
So up next, we have an update with Akiva Leisman, CEO of Mako. We did a webinar recently, so not too much of an update, but I think you wanted to touch on some exploration as well as the production numbers and whatever else is new, Akiva.
Right. It's always a lot going on over at Mako. So we're always working on our 3 things. So with respect to the mine, which is now operating well in excess of 500 tons per day net, probably the biggest thing going on there is that the mine continues to outperform. I think we got our resource model down. We put out a few months ago a reconciliation report that showed we were plus 10% on grade and about 2% on ounces. That positive reconciliation has continued at levels above that since we put out that report. A lot has to do with how we were modeling historical workings and voids. So this is really the first time that we're opening up the original 1922 to 1926 mining operation, which was the best part of San Albino and its history. So there was definitely old timers down where we were, but the way that we were handling a lot of that historical workings, we were taking in, frankly, an overly conservative view on what was actually taken out of the mine in the very brief period of time that it was up and running in 1926. So all of that means we are positively reconciling not only on tonnage, but because we had some areas of the mine that was in the good stuff, the grade is also positively reconciling as well. Now, on the other side, now that we're a little bit further into the system, we've now transitioned from the oxide part of the deposit to in fresh material. So our gold mineralogically is free. So all of it is either coarse gold or an electrum. But when we're in this area of the mine where it has the much more well-developed veins associated with it, the material is harder. So the texture of the mineralization is such where it becomes more difficult to process and blast. So a few things need to happen over at the plant. We need to adjust our operations to make sure that we take our grind size down from a relatively easy 105 micron level down to 75. It's going to take some time. So right now, it almost like is fine-tuning the plant, just like we did during startup last year. So we'll go through a few iterations of optimization over our plant over the course of the next few weeks. And then the recoveries also are expected to be below the 93% that we were experiencing before. Our metallurgical studies that we put out to the market in 2019 were showing approximately 86% recoveries in the material that we're mining right now. So those are the expectations for kind of where we see recoveries going forward when we're in the meat of this deposit. So positive reconciliation in terms of mine, but at the same time, we have to be a lot sharper on how we're going to be running the plant going forward. Now, with respect to the other two projects, the discovery over at Las Conchitas, we're about ready to submit our initial permit application for mining and exploitation over at Las Conchitas over the course of the next month. Our anticipation is to get our frame of reference for that permit in place such that we will be approved to begin moving material from Las Conchitas as supplementary or from our San Albino operations by the very end of this year, so in Q4. And at some point leading up to that, we're going to be making the decision to go and expand our operations from the 500 tons per day to 1,000 tons per day. So probably we'll be making that decision sometime in the latter half of this year, and then to be implementing it sometime in the middle of next year to go and expand our operations to 1,000 tons per day. And then, go ahead.
Sorry, Akiva, just in terms of what does that expansion entail?
So we laid out all of the engineering and civil works for the 1,000-ton operation when we were designing the original plant from 2019 to early 2021. So from a fixed infrastructure perspective, there really isn't all that much that needs to happen. I will need another series of 5 leach tanks to process the additional material. Our crusher is oversized even for a 1,000-ton a day operation. We run our crusher in batches. We can easily handle 1,400 or 1,500 tons per day. With that, our mills, now that we've had a lot of time running each of what we call Betty and Bertha, our 2 workhorses over here, each one is capable of handling 600 tons per day, plus, albeit with reasonable amounts of downtime. So the expectations are with our two mills will have more than enough milling capacity. And then really the bottleneck on getting this thing up and running is the back end. So the filter press to make sure that we filter and stack our tails dry. I would say now that we've gotten a lot of the bottlenecks out of our current filter press, we can probably push that consistently to 700 or 800 tons per day if we wanted to. If we ever wanted to go significantly above 1,000, we need to at least have an incremental expansion of that piece of equipment, which these days are probably running about an 8-month lead time from the time that you put in your purchase order. So as soon as we make the decision, 8 months down the road, less than $5 million, we'll be able to double our capacity pretty easily. And lastly is the exploration. So we announced a month or so ago our $17.2 million exploration program, which would consist of just over 110,000 meters of drilling. Of that, just under 80,000 of that is in core, which is for public dissemination. And then what I'm actually most encouraged about on that is that in addition to those 7 core rigs, we also have 2 reverse circulation rigs that are going to be coming to site. One of them has arrived, I think, yesterday. So hopefully we'll get that up and running sometime next week. Those RC rigs, from a productivity standpoint, are going to be 4 or 5 times more efficient than the core in terms of speed of data. And right now, if there is one thing that is like holding us back, it is the amount of data that we have to accumulate and process. And so to have these workhorses over there, initially with that one, we'll be able to pepper the property with an RC rig, and it will guide kind of going back for our core. The RCs are not very good at getting geological and lithological information. So you'll be getting chips. They are very good at finding out gold hotspots. So when we're there, we'll see kind of where we're going to be getting underground samples, and we'll follow up on core. But that is going to be go a long way to moving our exploration program forward. And we've said this publicly. We are going to be making at least one material discovery this year. So I would stay tuned for that. But certainly in terms of what we're finding on our property is pretty extraordinary.
Where do you think you're going to make that discovery, Akiva? What's your bet?
Right now, currently have 6 core rigs on site. 2 of them are still waiting for a crew. So those are only going to be turning, I would say, over the course of the next couple of weeks now, right after Easter. So the 4 core rigs, and eventually that will be supplemented with an RC as well. Those are focused on an area directly north of San Albino, which has never seen a drill hole before. Clearly, the mineralization continues. If we find something, there's room for another San Albino over there. And then we have another one of those 4.
Sorry, is that region in Puerto Rios? So
the concession boundary between San Albino Murra and Puerto Rios does run through the area immediately to the north of us, but still to the south of the river. So the main meat of Puerto Rios is on the other side of the river, but we're talking about something that is a direct extension of this that's never seen a drill hole before, and clearly it is mineralized. And one of the other 4 rigs is on a virtually virgin territory on the north side of Las Conchitas. And the first holes that we were putting in there were designed to be a condemnation program for a waste dump. First hole we put in as a condemnation hole wound up hitting beautiful vein that if I was a betting man, I would expect it to be grading well in excess of a half-ounce material when that comes back over the course of the next couple of weeks.
It seems like you've got a ton of news flow coming. What kind of turnaround time are you expecting on the drill results?
Well, I don't know what happened with the assay labs, but they went from a 17-week kind of data delay, and that was up from maybe about 5 or 6 weeks earlier last year. Now they're back online, so we're getting results pretty frequently. So in March we put out 3 pretty substantial exploration releases as well that kind of cleansed us for all the information that we had in backlog. But the amount of meters that we're drilling, I would expect to have maybe not 3 press releases a month, but certainly at least once a month we're going to have an update going forward.
Well, looking forward to some of those results. Thanks for the update, Akiva.
Okay. All right. Take care, Deb.
Okay. Next, we have Ken Drummond joining us from Medexus. Hey, Ken, how are you doing?
Hi, Victoria. I'm doing great.
You guys have had a busy quarter. We haven't had a update in a while. So why don't we just start at the top? You guys had a really strong third quarter out early February. Maybe you could just walk us through some of that.
Yeah, excellent quarter, 21.3 million in revenue, US dollars. So, nice rebound in Excellon, which we've been talking about previously. That comes off a quarter. The previous quarter, we did 17.9. So nice sequential progression in revenue, produced 1.9 million of positive EBITDA off of that. So things are back to where we had them previously. So really pleased with the quarterly results, and those are the sort of numbers we expect to see going forward.
And then post the quarter too, you guys announced that you've commercialized Gleolan in the US now, and you're going to be relaunching that product. So maybe you can just walk through some of the details there as well for everyone.
Correct. So March 1st, we announced the licensing of Gleolan in the U.S. It's a drug we already have in Canada. So we licensed it for the U.S. It had been launched by the developer a couple of years prior. So it's doing about 12 to 16 million in net revenue now, US dollars. And so we're going to take it and relaunch it, put more selling resources on it. We think there's a significant opportunity to continue to grow the drug. So, very nice, accretive deal. They'll make a contribution this year, this fiscal year. And it also is very strategic in that this will allow us to put 6 reps into the same institutions that will utilize treosulfan, which we expect to get approved later this year. So clearly, nice accretive deal that has strategic implications, consolidates our portfolio, both US and Canada. So a lot of good reasons to add that drug. And that drug does have application in other therapeutic areas. So it's currently indicated for glioblastoma tumors, which is the most common form of cancerous brain tumor. It basically assists the neurosurgeon in resecting the tumor by causing the cancerous tissue to fluoresce pink when you shine blue light on it. So it's an aid for the neurosurgeon, but it is being studied in meningioma, which is a common form of non-cancerous brain tumor. And if that trial works, obviously there's market expansion potential with that drug. And then it's further being studied in breast tumors. So we've got license to the CNS indications, which would be meningioma. And obviously, knowing the drug well, we hope that we would be in the running for the breast cancer application, should it be successful in the clinical program.
And then you mentioned, treosulfan, and you guys are expecting approval later this year. I know resubmission of the NDA is soon. Can you maybe just provide a quick update on what's going on there?
Yeah, absolutely. So, obviously since the CRL last August, we've been working hard with our partner Medac to get the resubmission completed. We had kind of guided that we would do it around this timeframe. So we will succeed. We think we'll put it in April, so this month. And then that starts the clock ticking to a decision point, which will happen within 6 months. So we're getting pretty close to, what we think will be a positive decision on treosulfan. And as you know, treosulfan has the potential to more than double our revenue. We're at about 80 million now at base business. Gleolan adds another 12 to 16, which we think we can grow. And then Trio more than doubles that. So we're on a nice growth trajectory. And so, we've made a lot of progress in the last couple of quarters.
Okay, no, that's great. That's a great update. So I definitely appreciate you jumping on here today.
My pleasure. Thanks for having me.
Thanks so much.
Ken. We have back-to-back Kens today. Up next, we have Ken Hughes, who is COO of Microbix, and he's going to give us a bit of an update in Cameron's place. So hi, Ken. Nice to see you.
Hello there. Nice to see you. Things are going very well at Microbix. We are continuing with rapid growth and capacity building to support that growth. I'm the other bald guy with a goatee that works at Microbix. I just speak with the English accent. So I noted when last time you spoke to Cameron, it was about 2 days before we announced fiscal results for fiscal 2021. And to illustrate the point, of course, we had record sales over 18 million, nearly 80% growth, and a tidy little net earnings over 3 million. And then subsequently followed that up with a record Q1 with profitable again with a 4.9 million sales, and our Q2 will be out to tidying that up. We'll be out on May the 12th. In the intervening time, of course, we received a second very large order from the government of Ontario for our DXTM brand viral transport medium, where we actually delivered a whole load of that on Christmas Eve. We didn't put our Santa hats on, but we were appreciated as Father Christmas at the time and supporting Ontario in its testing efforts. And, we've become known as a preferred supplier. And of course, as we're Canadian, the supply chain issues in the international forum hasn't been a problem for us in that regard. Our three business areas continue to grow. The antigens, the Intel Inside in diagnostic kits around the world for infectious disease testing, our CAPS program, our quality assessment products that are our branded medical devices to ensure that testing generally for infectious diseases, COVID and others, is throughout all platforms is as good as it can be. And of course, our VTM franchise, which continues to grow, and we'll be adding other SKUs to that as we move forward. We've launched multiplex controls. Some people think foolishly that we're a COVID play, but of course we're a multi-decade virology company. We do have COVID products, but we've launched multiplex CAPS controls. We have CAPS for all the variants of concerns for COVID. And also, of course, we work in, as COVID becomes endemic, we're working on sexually transmitted infections. We're one of the world's leads in human papillomaviruses for early screen of cervical cancer and other cancers. We're involved in gastrointestinal and also in antibiotic resistance, pathogen determination, which is, of course, key to managing hospital-acquired infections. Right now, we're running about 5 million a quarter, but we have every intention of pursuing more than that. We have no intention of being a $20 million company. We're building capacity to move on from there to 50, 100 and beyond, and pursuing rapid double-digit growth as we continue. So to this end, capacity going forward, to this end, capacity building is where we are, and we're cashed up to do exactly that. We have commissioned the third lab in our new building 2, the third and final lab at 235 watt line. Picture of it is behind me. That was just after it was commissioned. There's about 10 people working in there right now, making our medical device branded swab-based quality assessment products to assure the testing of the accuracy of testing for infectious diseases in Canada, in North America, and throughout the world. Right now, we've got a capacity there of about 10 to 20,000 a week. When we install the full elements of automation, we'll be up to 50 to 100,000 a week. And that's a description of our logarithmic growth, where we're looking into 5 to 10-fold increases in capacity to basically service the markets that we're very well set up to do so. We also have acquired a third building. In fact, in the last little while, we've gone from one building at 14,000 square feet to 3 buildings at 34,000 square feet. And the third building at 275 watt line will be finished construction on Friday. And then commissioning will start, and it will be operational in May. Our viral transport medium program will be installed there, starting at 50 to 100,000 units a week. But after full automation in the late spring, early summer, we'll be up to 50 to 100,000 units a day. And of course, diversifying the franchise with different SKUs. We're in rapid growth mode, and we fully expect the building 4 to be on the horizon in this particular year. And we'll be building out a containment level 3 suite in building 1 to a 265 watt line to further increase our capabilities and ability to service antigens and quality assessment products going forward. Linked to that, we're focusing. One.
Oh, I was going to ask, would that fourth building be on what line?
We'll see. We have our eyes out. There are options. You know, we could acquire a whole new building and move the whole shebang in, or indeed, there's a number of local buildings we could look at as well. It would be nice to have a little a monopoly board there, so we could start to build hotels, as Cam would say. But we're not really going to do that. We'll just build a diagnostics business as we continue to do. So we're automating a whole load of processes. And I should comment that we're also automating quality control testing at Microbix because of the high throughput and multiple SKUs that we're currently working in. And of course, as recently announced, we're upgrading our ERP systems and our quality management system to electronic state-of-the-art cloud-based components, because we have to future-proof our company. Our current substantially paper-based system is supporting that $20 million, $25 million company as we continue our rapid growth. We want to future-proof and continue that sustainable high double-digit growth in the next several years. We've got over 100 staff now, all great professionals doing wonderful work. And so we're very busy. Our trajectory is open. We're having a whole lot of fun.
That's a really good summary and update. Thanks, Ken. I really appreciate that.
Lovely to see you, Deb. No problem.
Yeah. Hopefully see you in person soon, too.
Absolutely.
Maybe at the Bloom Burton conference.
Yeah, I'll be there.
Okay. Well, thank you.
Take care, guys.
Next up, we have Gary O'Connor from Moneta Gold. Gary, you've been busy. I think you just finished a 72,000 meter drill program.
Yeah, that's correct, Deborah. And thanks for the opportunity to speak today. Yes, we just completed it was all a resource expansion drill program, 72,500 meters, 130 holes. So it was targeting extensions of our current resources. We were, infilling pits where material is currently considered to be waste. We were connecting resources. We've been modeling some areas that had previously been drilled and were not captured in any resource. So we're currently in the process of running all of those numbers. We're updating the resource, and this month we'll have a new expanded resource out. So it's, exciting times at Moneta Gold.
Nice. And do you have a drill program planned for 2022 as well?
That's correct. We've already started our 2022 drill program. It is mostly focused on infill drilling, so it's for upgrading resources. So we're getting a head start on our pre-feasibility work. So we're doing a lot of infilling on areas, where we have inferred resources now, upgrading those. We are also, however, doing a number of exploration holes. So we have done some step outs. We've tested some new areas. Remember, of the core Tower Road project area, we've really only drilled 9 kilometres of a 17-kilometre strike length along the Desta Porcupine fault zone. So we do have upside beyond that. We've tested some of those areas. So we will put those results out probably after the resource. We want to get the resource out first, use all those great results we got from last year. Remember, we're not only adding open pit resources, we'll be adding underground resources. We had, intercepts up to 9 meters at half an ounce, so 16 grams per ton. And that was in the Garcon area of Garrison, where there's currently no underground resource. So we hit some exceptional grades there and good widths. We also intersected big wide zones within some of the open pit drilling. We had 280 meter wide zones in the Windjammer Central area, and an area never been drilled before, currently not considered to have any ounces, but we've really had a lot of success there. So yeah, we're feeling quite bullish on how this new resource will come out.
Can you remind me what your current resource base is?
Okay, we currently have 4.4 million ounces inferred and 4 million ounces indicated, for a total of 8.4 million ounces. Of that, there's 2.8 million ounces high-grade underground resources and 5.6 million ounces bulk tonnage open pit resources. So we're looking to expand that. We'll get that resource out this month, and then we'll use that resource as the base for an updated PEA. So that preliminary economic assessment study has already commenced. We did additional test work earlier in the year, metallurgical test work, great recoveries, 95.5% recoveries, good, clean, environmentally clean tails, no acid generation, no deleterious elements. So we'll get all of that into the updated PEA, and we expect it'll be something the market will pay attention to.
What's the timing on the PEA?
The PEA, we're looking at June this year. So we're looking, in June. So we'll be working on that immediately as soon as we receive the resource here this month.
Okay, great. Well, it sounds like you've got a lot of catalysts, tons of drilling this year, a resource update in the next month, and a PEA in kind of end of Q2. Anything else that the market can expect from Moneta this year?
Yeah, we'll have a good flow of, besides the resource update in the PEA showing good economics, we'll have a good flow of drill results. People will be able to see the size and scope of this project. And we'll be continuing to, add to our project delivery team. We've been added some key people, and we'll continue to do that. We're looking to, bring this project forward, de-risk it, move it into pre-feasibility. We're continuing, with our environmental baseline, our community engagement activities, and we're ticking all the boxes in regards to de-risking and moving the project forward. So, yeah, another busy and exciting year for Moneta Gold.
Great. Well, I appreciate the update, Gary.
No, thank you, Deborah. I appreciate the opportunity.
Yeah, look forward to the updated resource.
Thanks. I appreciate it.
Next up, we have Paulo Lestrito, who's VP Corp Dev at Sailfish Royalties. Hey, Paulo.
Hi, Deborah. Can you hear me?
I can hear you. I think it's your first digital newsletter with us, but not Sailfish's. Usually Caesar gives the update, but why don't you give us a bit of an update on what's going on with Sailfish?
Well, maybe just a quick introduction for anybody who doesn't know the company. So Sailfish is a royalty company, and important to highlight that it has achieved exit velocity, one. And the second thing you want to highlight is that it has leverage to two things, both the gold price, but more importantly to exploration. And so just as an update and piggybacking one of your previous presenters earlier, we have a royalty on Mako Mining's San Albino project, and you heard about all the great drilling that they're doing there. So the update from that perspective is going to be beneficial for Sailfish, both from a resource expansion standpoint, but they also talked about doubling production to 1,000 tons a day, and that'll go straight to the bottom line here at Sailfish as well.
Okay, and can you tell me what you're generating in terms of revenue from that stream right now?
Yeah, so we've got two ways that we're generating cash flow from Mako. It's both the stream and the gold loan that we've put into the company. We're generating about $1.8 million US a quarter. We've got a 4% dividend yield, no debt, and that cash flow is going straight to our shareholders.
Okay, great. And yeah, can you talk a little bit about the dividend policy? You implemented one, I believe it was in Q2 or Q3 last year, Q3, right?
Yeah, so I guess the way we look at Sailfish as a royalty play is it's a pass-through vehicle, so that the cash flow that we're able to generate from this vehicle, that it should be going to shareholders. So currently we're paying a 5-cent US dividend per year. So that translates to about 4% per year. Dividend yield, that's one of the highest in the gold mining space, definitely in the royalty space. And we also have leverage to the Spring Valley asset that Waterton has in Nevada. And our rough calculations is that once that goes into production, that should generate about $11 million a year in cash flow to Sailfish. And that would be a great benefit to Sailfish shareholders via that dividend. So we would look to adjust that, because that would be a long life asset, something in the order of, call it 12 to 15 years once it goes into production.
Do you have any update on what's going on with Spring Valley? I know it's held within a private company, so information is not always readily available.
It's a great question. So we've been able to kind of, based on some information from people who have drove by the site, there's 5 or 6 drill rigs currently operating on the property, drilling and expanding the project there. So we're looking forward to some type of either one transaction where Waterton sells the asset and that data goes public, or some sort of update to the public markets to kind of show the footprint and what that asset means to Sailfish.
Okay, interesting. And maybe I know the company put out a press release on updating us on Swordfish last night. Maybe you can give us a bit of an update there as well.
Yeah, that's so the company has an asset called Gavilanes. Gavilanes is about 22 million ounces of silver equivalent in Mexico. That's about 31 kilometers away from San Dimas. So it's in mining country in Durango State. And the project just has not received the exploration that it should receive, given its location and the pedigree of the project already. So that 22 million ounces has only been generated by 47 drill holes. We've been trenching, surface sampling, and getting this project ready for it to be in a public vehicle. And once it's in that public vehicle, we're going to be aggressively drilling it. And through that drilling, we're expecting rapid resource expansion. So if you imagine what 47 drill holes has yielded in terms of 22 million ounces silver equivalent, based on the trenching and sampling that we've done, we're pretty excited that we're going to be able to both grow the resource, but also push the grade a lot higher.
Do you have an updated timeline for a potential spin out?
So we've been actively marketing what Swordfish would be the second half of last year. The market was in a different mindset than it is right now. We're seeing a lot more interest in the silver market, both from portfolio managers and also corporates. So the idea is within the next, call it 6 months, that we're going to consummate that transaction, get it in a public vehicle, and move the projects forward. In the meantime, what we've been doing is actually preparing and doing the boring groundwork, whether that's geophysics or geochem, to move the projects forward so that it's ready for prime time in terms of drilling and having an active program there.
Got it. Okay. Well, I think that's a pretty thorough update. Anything we missed, Paolo?
No, that's about it. Stay tuned, and please feel free to reach out to us if you have any questions.
Yeah, and I'll see you on the 21st in Scottsdale.
Looking forward to it.
It'll be fun. Also coming to Scottsdale is Matt Philgate from Talisker Resources. Hi, Matt.
Yeah, nice to see you. Always a pleasure.
Nice to see you too. So Matt is VP Corp Dev of Talisker, who's also a new client of ours. And since it's your first exposure to the digital newsletter torture, why don't you go ahead and give us a little bit of an overview of Talisker?
Yeah, sure. Talisker is a gold exploration company. We're based in South Central British Columbia. We have a multitude of different stages of projects. Our main project is our Braylorn Gold project, which we're currently drilling off the resource. And then behind that, we have our Ladner Gold project, which is a 700,000 ounces indicated. And that will be advancing further into resource next year.
Okay. And maybe you can talk a little bit about upcoming catalysts that the market can expect over the course of the year.
Yeah, absolutely. So Braylorn's the major focus for Talisker right now. We're aiming to release our maiden resource coming up at the end of Q2. Our target for that resource is 1.5 to 2 million ounces with an average grade of somewhere between 8 to 9 grams. So currently on site, we have 9 drills operating. So really pushing, trying to get that resource completed. And what we're seeing now is we're seeing lab turnaround times increase. So right now we're averaging about 24 days for returns on assays, which is excellent because the last year and a half has been very difficult with COVID. So yeah, we're beginning to get a lot of assays back. We're seeing a lot of news flow. We're aiming to put out updates at least once a week. That's kind of our goal. Sometimes it's once every 10 days. Our last press release that we put out this week was 23 grams over just under 7 meters. So we're starting to see some really exciting results close to surface at Braylorn as we advance this resource.
Do you think that drill result turnaround for the labs, do you think that time has compressed because fewer projects are being drilled right now? Do you anticipate that time will increase as more projects, go into their drilling season in BC?
Yeah, Deb, I do think that has a lot to do with it. There's very few projects being drilled year round right now in British Columbia, and we're one of the larger ones. That and some other big projects like Barkerville Gold rolled their drills back, so less material coming from there. And then I think also just as COVID's winding down, we're seeing more people going back to work. And so I think it's just a combination of that. We were waiting up to 3 months for assays in the past, and so now we have 24-day turnaround. We're able to get results back, get them into the model, and advance that resource a lot quicker.
Certainly makes it a bit easier.
It does. Yeah.
So in terms of drilling year round, you can just drill all year round where you are?
Yes.
Why are you able to, and a lot of projects in BC are not?
Yeah, one of the things that Talisker, that when we were initially looking for bigger projects, was infrastructure and access. And, the access in southern BC is incredible. We have 3 major highways running from, southern BC and then up through Whistler to the Braylorn project. And so it gives us year-round access. Braylorn has a town just outside of where we operate. So the government maintains the roads. They're always plowed. They only get a couple feet of snow there anyways. So the logistics of operating year-round are really good. And we have power and offices and access to internet and all these really important things. It also lowers our costs significantly when we're drilling at about $225 to $250 a meter all in, relative or compared to costs like 600 plus per meter in the Golden Triangle. So we get a full year of exploration, which really allows us to build a resource quick, because we started this a year and a half ago at Braylorn. So in a year and a half, we're approaching 130,000 meters of drilling and approaching a resource of 1.5 to 2 million ounces. That would take us 3 to 5 years up in the Golden Triangle, because we can't explore in the winter. We have a half season up there.
Now, access to infrastructure, you said, is really good. I believe that Braylorn was one of the largest mines in Canada, or largest gold mines in Canada when it operated.
Yeah, that's correct. Yeah, it operated for about 40 years of solid production, and they mined out 4.2 million ounces at an average rate of 17.7 grams. So for the longest time, it was the deepest mine in Canada. They mined down to just below 2 kilometers depth, but it was also the highest grade mine in Canada. And the reason why our initial resource is going to be between 8 and 9 grams is because we're going to be taking a bit of a bigger stope. So we're including dilution on the wall rock, around 2 meters dilution. But we're seeing these high grade pockets or high grade ore shoots within the veins. And so, that's kind of an added bonus. So when they were in production for 40 years, the gold price was $35 an ounce. And, at that time, to really make money, they had to mine stuff that was 20 plus grams. But obviously, current market conditions are a lot different. And for us, material that's 3, 4 grams up to 8, 10 grams is all economic now. So it really expands the potential at Bray Lawrence significantly.
Great. Well, appreciate the overview. And yeah, it's been fun working with you. So looking forward to getting out and doing some marketing and conferences. And I'll see you at our cocktail thing on the 21st.
Absolutely. Yeah. Looking forward to it. Thanks, Deb.
Bye, Matt.
Okay, bye.
Last but not least, we have Peter Londa, CEO of Tantalus, who does not run a mining company. So
I was going to say I'm odd man. I'm odd person out on this one.
Yeah, we kind of had a bit of a story of the mining companies at the end there.
Yeah,
so sorry, Pete, to keep you waiting, but I know you wanted to talk a bit about the recent acquisition that you made and why this is meaningful.
Yeah, thanks, Deb, and appreciate you having Tantalus Systems. So, we purchased a gold mining company, and no, I'm kidding. We purchased a company focused on helping utilities integrate electric vehicles, solar panels, distributed storage, and ultimately preparing for investments in microgrids. The company's called Congruitive Systems. It's a small software company based out of California that has a rich history of supporting utilities in a number of different ways. In the aggregate, the acquisition is supporting about 30 utilities. So with the transaction, our user community has now expanded to approximately 250 utilities across the United States, Canada, and the Caribbean Basin. And as discussed on previous newsletters, one of our key objectives is to get to as many utilities as quickly as possible with our technology to really establish the multi-decade relationships that drive revenue and increased opportunity for Tantalus and for our shareholders. The acquisition, by putting us at the forefront of helping utilities prepare for the integration of electric vehicles and a number of distributed energy resources, it's also pulling us into an opportunity to expand the number of verticals we go after. And so historically, our sales channel has been focused on converting utilities. As we announced earlier this week, we have now deployed our first microgrid project in partnership with a company called Energy Toolbase. And it's a really exciting project in California for one of the largest real estate development firms in that state. The microgrid includes a combination of solar panels and battery storage that is backing up the corporate headquarters of this large industrial organization. And what our technology is doing is it's not only helping the industrial company, the construction company manage when the grid goes down, meaning that they lose power at their headquarters, but also providing the tools to island their energy requirements when peak demand rates start to increase in California at various times of the year. So not only is it a resiliency play for large organization, there's also an economic play that the utility can leverage this asset regardless of whether they have access to power from their utility or not. And so the microgrid space is a quick growing area of focus. It's projected to be roughly a $17 billion US market opportunity in the foreseeable future. I think actually almost $30 billion by 2026. And so by having the technology through this acquisition, by successfully partnering with Energy Toolbase to deploy our first project at a commercial scale, it takes Tantalus into a new realm of a new market to chase after in the microgrid space, while still staying true to the utilities as we think about how to help the utilities prepare for these investments in microgrid strategies and microgrid deployment. So really exciting opportunity for us. And it marks the first acquisition that we've made as a publicly traded company. So very excited.
Congrats on the acquisition. So just to clarify, because I'm not a technology person, sometimes I get lost in some of these concepts and implementations. So really what you're talking about with Congruitive is making it possible for people with EVs to plug their EV in, draw power, but as well feed power back. And same with solar panels, things like that. Is that really what the technology does?
So the broader capabilities that we are now able to offer with Congruitive at the highest level, Deb, yes. But what the technology does is it really allows the utility to interact with their customers, whether that's you and me as potentially a purchaser of an electric vehicle or installing solar panels on the home that we live in. And not only allowing the individual, you and me, to potentially sell load back to the grid with the solar panels, or discharge the battery of an electric vehicle to feed power into the home, thereby offsetting the need to purchase power from the utility through the meter. It's providing the entire system for a utility to have interoperability to those assets. Meaning, if someone goes out and purchases an electric vehicle, they're not calling their utility to tell them that they've now got an electric vehicle with a charger at their home or apartment building, wherever the case may be. What that means for the utility is the utility doesn't have visibility into the increased demand, the power that has to be delivered to that specific location to charge the battery at various times of the day. Incremental to that, as the electric vehicle charging infrastructure evolves, as the batteries for vehicles continues to evolve, there's an opportunity, it's called V2G, vehicle to grid, right? Discharging the battery into the grid or into the home or premise to offset power from a utility, or to offset the interruption if power disappears from the utility because of an outage. And so we're laying the foundation and we're building out an entire platform of technology to help the utility pinpoint where has an electric vehicle shown up, what stress does that have on the existing assets, and then as technology continues to evolve, how does the utility prepare for managing the discharge of that battery and the disruption that has to the grid? Most people are, don't really think of it in that capacity. They just think about, I no longer need to go to a gas station because I have an electric vehicle. Right? Well, that's assuming that the power company can continue to power your car. Right? That's a very broad assumption to make, and it has a cascading impact to the utility. And so, what we're doing, software, hardware, professional services, is enabling the utility to prepare for that, and most importantly, be reliable in delivering that power when and where it's needed. I hope that makes sense.
Yeah, that makes sense. I think a lot of people just assume that the grid and the utilities are already have these capabilities, that it's already multidimensional and that you can already do, feed into, draw from. And I think it's a surprising thing for a lot of people to realize how weak and, unprogressive some of the utilities across North America and the world are.
It's very much the case. And while in some circumstances, an electric vehicle may not have immediate impact onto the distribution grid and the assets that the utility supports, meters, power lines, insulators, pole top transformers, all of the devices that we never even think about because we're just focused, do the lights come on? Can you charge your iPhone or your laptop computer? It's all of those devices that start to get stressed as consumer behavior changes and as businesses and their behaviors change and start to migrate to these cleaner forms of transportation or cleaner forms of power generation at their homes or at their buildings. And so that's why we exist. And why we believe there is really a long-term trajectory and why we're continuing to see increased momentum for our business as the world evolves. And I think as power outages, unfortunately, become more prolific and more painful for all of us.
Mm-hmm. And I think one of the other things that people don't seem to understand about the business is this hardware and software component to it. My understanding, and correct me if I'm wrong, which is quite likely, is you have a hardware component that you install with the utilities. And then from that, you sell all these other services on top of it that are related to it. Would that be an accurate description of Tantalus's business model?
Yeah. So if you put it into the context of, I like show and tell. So if you look at it in the context of our cell phones, right, you need a physical device in your hand, and then you need all the software that's embedded on this device, and you need the communications to the device, whether that's cellular or whether that's Wi-Fi. And so that's exactly what Tantalus does on behalf of the utility. Instead of an iPhone, separate device, this is the faceplate of an electric meter that's on the side of everybody's homes or buildings. And so the hardware that we build is not the meter, but it's the circuit board and all of the distributed and edge computing behind the meter or other devices that are deployed by the utility. And it's from the hardware, right? And this is a ASIC Linux-based computing platform, an ASIC chip from the device, just like your iPhone, right? We're pulling data, we're communicating that data back to the utility and into software applications, and taking that data and driving it through analytics tools as well, that are the software side of our business to help utilities understand what's actually happening at the very edge of their grid. How are things changing? What's unfolding with the devices that they deploy and are responsible for managing? And how do we take that data and help them really improve their efficiency, their reliability, and their resiliency? So it is a combination of hardware and software. There's some professional services as well. But the best analogy is everything that we use every day is no different than the utility. We're the phone, we're the computing platform, we're the software, and we're the communications for the utility.
So one of the things that I think is really interesting about Tantalus and the software solutions that you provide is, my understanding is that if a utility starts to see a power surge in certain regions, they can manage some of the flow of energy. They can turn down some, like, let's say air conditioners during the day when people aren't home. They can manage that. Like, am I getting this correctly?
Yeah, we refer to it as load shifting. And so again, it's when you start to disaggregate electricity, right? It's really in the form of voltage and current. I won't take you down that rabbit hole on this webinar. Maybe another day if people are interested. But what we're seeing is, as people come home, especially in anticipation of the summer months, and they start to activate air conditioning units, to the extent you live in an area where air conditioning is prolific, like it is where I live outside of New York City, right? People start to ramp up their air conditioning to ultimately cool their homes, while, and certainly not keeping it cool while they're at work or where kids are at school or at summer camps, whatever the case may be, right? If everybody turns on their air conditioning at approximately the same time of the day to cool their homes, or crank their heat if there's electric heating, right? That changes the demand profile on the grid, just like a highway, right? Rush hour versus not rush hour. Do we have more cars? Do we have less cars? Do we have more demand for electricity or less demand for electricity? And so the utility is constantly trying to manage the supply of electricity, what they're actually putting through the grid, versus the demand of electricity, what we all consume. And the goal is to have balance between supply and demand. What's unfolding is we're seeing increases in the demand side without the capacity to increase on the supply side. So all of a sudden you get an inverted curve, or you get a curve that's misaligned. And that's when assets start to fail. That's when devices start to fail, or in some circumstances, they start to spark, and those sparks lead to wildfires. And it's bad for communities and the environment. And so what we're trying to do is provide visibility to the utility on how the demand side, what people are consuming, is changing throughout the course of the day, throughout the course of a month, throughout the course of a year. And then build in automation to adjust the demand in the event that there is an imbalance between what they can supply versus what people need. And that's why electric vehicles are really disruptive. All of a sudden, instead of the gasoline that we all go and purchase, we're going to be plugging our cars into the electric grid. It's increased demand of electricity. Well, how do the utilities ultimately deal with that? And how do they automate things to avoid a true imbalance between supply and demand?
All right.
So that's a lot of what's driving the nature of our business and why we're gaining scale across the utility industry as quickly as we are.
Well, I appreciate you taking some extra time to go into some of the more dynamic parts of your business. I think it's a really interesting story. We did our first in-person roadshow last week in Vancouver. The reception was really good. I think, the stock, since going public, has not performed as well as we would have hoped. But I really think that, with continued exposure and just explaining the story, because it's not the easiest story, but I think it's so timely and it makes so much sense why this technology is needed and why you're well positioned for that kind of growth. I think anyone that doesn't know Tantalus should definitely watch some of the previous webinars, and feel free to reach out to us if you have any questions or would like a meeting. Pete, anything that I'm missing today?
I think you summarized things extremely well. So thanks for including us, and thanks for giving us a platform to continue to try to build awareness on the importance of what we're doing, the success that we have, and the opportunity that's really in front of this company.
Great. Well, thank you very much, Pete.
Great to see
you. And
with
that, I think we're wrapping our first digital newsletter of the year. Vic ditched me a bit ago, so I'm flying solo. One thing that we forgot to update is that we have a new team member, Magda Gardner, who joined us in March. She's not webinar ready yet. She's got to do some media training, but hopefully by the next digital newsletter, she'll join us. She's adding some technical bench strength on the mining side to help us better service those clients. And yeah, with that out of the way, thanks everyone for participating. If you do feel like contributing to our charity, I will make sure the links included along with this video. And yeah, I appreciate everyone's support, and thanks to all our clients for providing us an update today. Have a good one.